Well, good morning or good afternoon, depending on where you're at in the world. Welcome to Trading Coaches Playbook. My name is Tony Benson, and I will be your guide for the next hour. We're going to have a little bit of fun today, or a lot of fun. Let me get that thing going real quick. Hello, Brenda. What's happening, Will? Good evening. Where are you at? I thought weren't you in Colorado or something, or am I getting you mixed up with somebody else? I can't keep it all straight. I can't even keep my own life straight. Evening, isn't it afternoon there? Oh, that's right. That's right. As soon as I said that, I was thinking that. I thought everybody's in Colorado. I haven't been out there for a while. It is beautiful, though, at least the parts I went to. So most places are nice. They're just different. There's not much to beat the Pacific Northwest, though. I've been all over the country, and oh, yeah, flat and cold. Hot and humid there right now, isn't it? There's not many other places in the country that I've been to that I would rather live than where I'm at. So we got clean 4 seasons. We got pretty much everything here, except for tornadoes and hurricanes. We do have an earthquake. We have a giant volcano, supposedly. It's supposed to go off once every 600 years. It's been like 559 or something. Anyway, welcome. Let's where am I at? I'm in the Seattle area. I'm actually south of Seattle. So Seattle is the city of Seattle has become super ghetto. It's been pretty ghetto for 3 or 4 years, but it became super ghetto. Oh, another Colorado. Awesome. New Mexico. Hey, Karen. Awesome. Yeah, I'm not going to go there, Will. I guess I could. But yeah, actually, you know what's funny is that there's several people on the Seattle City Council that are socialists, like flat out. They come out, they identify as socialists. So anyway, I don't get too involved in the city politics. I don't really care that much because I'm 35, 40 miles south of the city. So, and I don't go there unless I absolutely have to. So, but let's get the disclaimer out of the way. I'm not a registered broker dealer investment advisor. I will not give you any recommendations or advice. If we do talk about specific trades, which we're going to today, just assume and know for certain that it is a practice trade or a paper trade. For regulatory reasons, we do not do funded trading here. We don't technically discuss it. So, but could you fund a trade or paper trade? That's between you and the mirror, basically. So. You must be in Ireland. I was in Ireland, and they were asking the same question. What's a socialist? Somebody that believes in taking from one group of people and giving it to others. You take money from those that have and give it to the have-nots. I mean, that's the simple way to put it. So it's never really truly been a successful system anywhere, just like communism hasn't been, because it's not an individual, it's a collective society, basically. Which there's certain arenas where collectivism, I mean, there's places where collectivism is place, specific areas, I should say. In a home, I mean, there's so many different things. I don't want to get into politics of things, but because gets a little crazy. It's one of 2 things you're never supposed to talk about, right? Politics and religion. But yeah, socialism is not, and when you look at historically political systems, socialism, communism, they don't work long term. So, and most people are, what's the saying? It's shared misery. That's what it is, something like that. So anyway, let's talk about what's coming up. Patterns in a Flash Q&A. That's with yours truly on September 7th. Is that right? It must be. They have it on there. If I did, I try to look at my calendar. Oh, I do have it on. Okay, good. Just making sure I have it on my calendar. I don't want to accidentally miss it. That wouldn't be good. I haven't done that yet. I don't plan to. So awesome. Thanks, Miguel. Yeah, that's true, Will. And that's the only reason I touch on it a little bit, because it is tied into finance. I mean, you make a good point where politics does play into it. So it is, it's one of the things with trading. It's important to at least be somewhat informed of what's happening. I mean, y'all saw, I don't know what, Yeah, I don't know if you saw the craziness this morning when Powell spoke. His speech was really short. It was pretty much a non-speech. He didn't really say anything other than the fact that they're just going to keep doing what they've been doing. So it wasn't anything profound. Market tanked for a few minutes and then it bounced back a little. So, oh, hey, apparently the kitty wants to come say hi. So yeah, I mean, politics definitely has an effect. So, I mean, you look at, and again, not to rip on the Biden administration, but when you have a war on energy and you destroy a bunch of energy supply, then it's going to increase the cost of energy. And the cost of energy affects everybody, especially those on the lower end of the economic spectrum, those that have a fixed income, those that are retired. If you're paying $400 a month more for fuel and food and all the other stuff, that has a major effect. And when energy costs go up, everything else goes up because you got to transport the food from the farm to the store, which costs money, right? And when fuel costs. So there's all these different things. When you put them together, it's ugly. That's why we have inflation. It's all about fuel and the energy costs. And it all just permeates through the rest of everything costs. I mean, Amazon, if they're delivering products to your house, that's where we've gone to, is buying stuff online. Huge percentage of people do. I do. And so their costs are all going up, which means their margins are going down. So they're less profitable, which means their stocks typically go down. So yeah, it's interesting. It will be interesting over the next couple of years. So I don't know if she wants to. She's sitting over here. So those that don't know me, well, Patterns of Flash, the one on September 7th, that's the tool I created. That is, in fact, yeah, that's not even 2 weeks away. So if you haven't experienced Patterns of Flash, go get the trial. Miguel put a link in there. You get 2 weeks of a free trial, right? Which means the 7th is not more than 2 weeks away, is it? No, it's less than 2 weeks. It's 10 days. So you can get the trial and then come out and spend another hour with me on September 7th at 8 p.m. So not for you, there's not. Oh, yeah. Yeah, there is a trial. There's the link's right there. Well, I think that should show up for you too. Miguel just dropped it in the chat box. So copy and paste that link and send it to your friend. So, and I'll talk a little bit about that later. I'll show you, for those who aren't familiar with it, don't know, I'll show you some. Trading News coming up September 12th. I don't think I'm doing that one, but Rob and I rotate, usually do every other one. So SPS Cash Flow Secrets, Q&A, and then Mastering the Trade on the 15th. The Cash Flow Secrets is the 14th. Mastermind groups every Tuesday. The free online workshops, Power Hour, Trading Coaches Playbook, which is what we're doing now, right? Your winning trading formula, August 31st and September 1st. And then the other one's Power Option Plays Tuesday and Saturday. The Cover Call Explorers on Thursday. And then Brandon's E-Mini Think Tank Monday, Wednesday, and Thursday. So I took a little bit of a play from Brandon. I've done 2 iron condors in the last week. They're a little bit crazy. I'm kind of mixed right now. Because on one hand, I want the market to keep tanking. Because over the last week or two, I've been adding put positions. But yesterday I did an iron condor on the Russell. And so I wanted to close between 1930 and 1940. If it closes there, I get max profit. It's crazy. Anyway, there's that ugly mug. So we're talking about intraday patterns today. Well, what's up with that, Brenda? Why did you miss it? I haven't had enough coffee yet today. We'll set a reminder. That's what phones are for. That's the only reason I remember anything these days, is because I have a phone to set a reminder. Watch what? You're younger than me, I think. There's the question that I get quite a bit. Because if you don't know me, I'm a patterns guy, right? Really? I thought you were younger than that. And my entire Patterns of Flash is all based on patterns. It's all based on technical analysis. And that's really where, as a trader, especially a short-term trader, the vast majority of your decisions should come from the price chart, right? 95, if not 98% of my decision comes right off the price chart. Indicators, they come in handy for certain things, but I don't put a lot of emphasis on, mainly because they're derivatives, right? They're a mathematical calculation designed to smooth out the price chart from past price history. So they're not as timely. They're not as fast. They don't show you, I mean, they show you some, but they're not that reliable, right? The price chart is what's happening right now. Sorry, I got this weird itch in my nose. Probably this cat. She loves to just sit here. She just sat on my hand the other day. So she'll probably make an appearance. Yeah, it might be. She's a kitten. She's a Maine Coon. So she's more like a dog, except that she sits on my desk right here and trades with me. Pick her up. No, she doesn't go out. Here, let me see if I can move the camera. There you go, kitty. Say hi. She's my trading kitty. She'll sit there when I'm sitting with the screen and just lay next to me. So it's kind of crazy. I got her and Einstein with me. I got that just to cover up the router. Yeah, she's pretty awesome. She's new. I haven't had a cat for years. I haven't had any animals for years. But I had a meeting with this lady and she had this Maine Coon kitten to get rid of. And she said, you can have it for nothing. I was like, well, okay. I wasn't really planning on it, but my kids have been asking for animals. So, but getting back to this, do patterns work on an intraday basis? And there's one answer. Yes, yes, and yes. Patterns work on everything. This is the beauty of patterns. This is one of the reasons that I stay stuck there. It's not, I've had people ask me, why don't you do this? Why don't you do this? And even though, why don't you teach this? And why don't you teach that? And why don't you do this? And why don't you use this? And because, oh man, it's killing me. First of all, I stick with what works, right? I've been at this for 22 years now. I started in 2000, not quite as long as Rob, but he and I met in 2000. And when you go down all the rabbit trails looking for the answers of how to master the trade or how to master trading, right? You find out that a lot of the junk, it's one reason I don't use indicators a whole lot, is because they really don't do a whole lot for me. What really matters is the core concept and the core basics with regard to charting. What's the trend, support, resistance, patterns? What's the pattern? If there's a pattern there and it's breaking out of a pattern and patterns are consistent and reliable, then isn't that what you're looking for with trading? Don't you want something consistent and reliable? I mean, I've met a lot of people that took $10,000 and turned it into $200,000 in 6 months, and then they blow it up and take it back to 10,000 in 3 months. You can make money in a short term when things move a very specific direction the way you want it to, but can you consistently make money in every market? That's the goal of every trader, right? Is to consistently make money no matter what the market conditions are. And that's where patterns come in. They're consistent, they're reliable, they're repetitive. That's why I stick with them. And once I found what worked, it's like, why, if it ain't broke, don't fix it, right? So, but I get this all the time. And the beauty of patterns, and this is true for charts in general, and I say this often because it's true, and I know some of you have probably heard it a billion times, but for those of you who haven't heard it, charting is charting is charting. No matter what time frame you're trading on, whether it's a daily chart, a weekly chart, a monthly chart, a 60-minute chart, a 5-minute chart, the concepts of support, resistance, trend, all that applies to every single time frame you're going to look at. 1-minute chart, tick chart, I don't care what it is. The concepts all apply. The one thing you obviously have to adapt for is the time frame. If you're trading on a daily chart versus a 5-minute chart, the 5-minute chart, 12 bars is 1 hour. In a daily chart, obviously 12 bars is 12 days, right? So you've got to adapt for that part. But the other beautiful part is that charting is charting is charting, even with regard to different instruments, right? Whether you're trading stocks, options, currency, Forex, futures, Bitcoin, crypto, I don't care what you're trading. The charts and the concepts all apply. Make sense? So that's the beauty. And that's one reason I stay really focused on charts, because I could go teach other stuff. I could teach option stuff. I could teach all kinds of crazy stuff, right? But it doesn't matter realistically until you master the charts. If you master the charts, then everything else is easy from there. It's downhill. I shouldn't say easy. It's never easy, right? It's simple, not easy. Very big difference. So, yeah. So basically what we're going to do, we got about 45, we're just going to go look at intraday charts and see if we're just going to hunt, look for some patterns. You talk to your cat while you research a candidate. It helps you hear the details. Does the cat repeat it back to you? It's like a parakeet cat. You can't just talk to yourself like normal people. Well, there is, you know what? We're going to jump. Actually, I'm going to go. I think that one's linked up. I'm going to maximize this one instead of having 4. There is US Bank Corp. And you can see this is what the market's done today for the most part. I mean, it's not the overall market. I don't know if I have that. And this is a little, I wish the one thing, and I'm sure it's a programming thing, but one thing that I don't think it's just a toss thing. Excuse me, because those of you that don't know, I'm using Thinkorswim. And don't do that. She's over here staring at the screen. She likes to bat the screen at the mouse. She chases the mouse on the computer screen. So she'll come up and just start like pawing at the monitor like this. It's goofy, but it's entertaining too. Where'd the Dow go? Where do I have my markets? Do I have my markets here? Is it not on here? The practice platform and the real platform obviously are separate, right? So one of the things that, and I don't spend a whole lot of time fiddling with the practice platform. I don't know. I thought I had I wish they would cross over and everything would stay the same on both. It'd be nice, but it doesn't for whatever reason. I'm looking for the overall markets. I don't want to. Indices, there we go. That's what I wanted. No, that's not what I wanted. That's too many of them. Some fish on the screen. Oh goodness. I'll have to check that out. Yeah, it mimics the real platform fairly well, but it's just the only thing that irritates me about it is it doesn't, like I said, it doesn't transfer over. It doesn't. So if I do something on well, you can see behind me, that's my trade machine, right? And that's all I use it for. The one that I'm on now is what I use for web shops and business and email and all that stuff. That thing is just purely 100% trading. I don't do anything on it but trade. So it doesn't move over. But Apple, there goes Apple. It's dropping down, looking for some kind of, and we basically have kind of a flag pattern going on right now, a bearish flag, right? You got this massive drop. You had this little move to the upside. See if we can, oh my gosh. Kitty, you're so crazy. She literally just sat down on my hand. I'm trying to see if we can do we draw some support resistance lines real quick. And sometimes, and this is the tricky part about when if you are day trading, which I do a little bit. I did a bunch last year, not as much this year. That's not, we don't even have enough time. I'm going to switch to a 30-minute, I think. How much I need a lower spot here. Where's the next level down? 2 points. Trying to find the next. I guess we got a little congestion right about there, about 165. Don't forget the Qs. How could I ever forget that? So now we've got the potential for it to drop to about 165, which is about $1.40 or so. So we have basically a flag pattern, which is about right. I mean, we're 171 to 1. That's about a 4-point drop. So it very well could drop past that. Y'all say y'all familiar with the flag pattern? Usually you see it on the bullish side, but this is inverted flag. I don't think there's technically a pattern called that, but I'm actually going to put a stop down here. You know what? I'm just going to hit it to market. Sell 500 open. Practice account there. 166.36. And I'd put a stop right above about 166.68, right above that low there, which it may bounce and hit. Just looking at the pattern, though, there's a potential for a couple of bucks there. I'm actually going to put a hard stop right above that high, 166.82. Now, normally, I'm kind of winging it here, going because it's moving quick. Normally I'd put a plan on there and have a stop back here, but sometimes if you catch something like this, you just got to go with your gut. Usually I don't. 166, what's that again? 166.82. You know, actually, here's what I'm going to do. I'm going to put 63. I'm going to put buy stop on 300 shares at 63 and 200 shares at, what was that again? 80 something, 82. And if you're not familiar with my style, this is a lot of times what I would do. I'll scale in or scale out of stuff. So now I've got two different stops, but one's a little tighter, one's a little shorter. And then I'll just move those down. So we got kind of a flag pattern. It's interesting that the first thing I popped up happened to be Apple, and it's just playing out as we go. So this wasn't intended. It wasn't even what I planned on. Normally I would have a trading plan. And for those of you that aren't, if you're not familiar with my trading plans, this is usually what it looks like. Right. And this is a daily chart, but it would be the same thing on an intraday chart. But I've got to stop, a target, and then an entry point. And in this case, we just had an entry point. I'm looking at going, okay, it's hitting the lows. So if it keeps going, if it's breaking the lows, it's probably going to continue. We got a little increased volume on here. Same thing. The analysis process happens. I mean, look at the volume on this as it's dropping, even though it's getting lighter as it's dropping. We got a little stall out here for a few minutes, right? This is a 5-minute chart. So we got 45 minutes or so. We just kind of went sideways. And this is very common when we have a big momentum move like that. And this is the beauty of the flags and the pennants, right? Is that they don't very often create reversals because of the momentum we get on the move to the upside or downside. So we got a lot of momentum on the downside, and now it's continuing to drop. So I'm going to see, I'm actually going to take this and move it down to just a little bit. This is one thing I do love about toss is you can just drag your stops. So I'm moving that down. I just drag them visually and look at the chart. And I'm dragging it basically down to the high of this candle. Because right now how much time do we have left in this candle? Where's the ticker thing at? About a minute and a half. If this thing turns around the next minute or two and rallies up, especially if it closes above the open of the candle, then what do we have? Somebody name that pattern if it does that. Yeah, it is lunchtime, which usually means we go into the doldrums. Today might be a little different considering the momentum we have. We never know, right? Sometimes it just keeps on tanking all day long. If this candle, let me zoom in, even make it even bigger. Well, I don't like that actually. It's too big. So if this candle closes, which we've got about a minute to go, if it closes up here by where it opened, if it continues to tick up right now, what pattern do we have? If it leaves a really small body, we'll just sit here and watch it. Actually, there's only 30 seconds left. Kind of. This is where if you trade intraday, and this is, I've talked about this before too. I don't know if I've done it here in this, but talked about vision, right? And it's important as a trader to have at least enough vision to look into the future and go, okay, what might happen next? And obviously this is happening real time, but this is what I love seeing. Okay, y'all need patterns in a flash. Unintentional plug, but it's there. Okay, so it didn't close. So if we would have closed, let me see if I can find one actually. Well, we would have had, oh my gosh. Oh, sorry, this is the first time she's ever done this. She literally covered up half the mouse pad. I need to find there it is, the pen. This is not a great example here, but y'all see that right there? Let me see if I can find another one. Oh, I gotta get rid of that pen though. I don't want the pen. There we go. See if we find one. There's one actually kind of, I don't know if does this zoom like that? It does. See that right there? That's not a great example, but we would have had a hammer, right? if this last candle would have closed up here, up near the high, we would add a hammer, which is a reversal signal, right? Which is one reason I put the stop right here, because I want it to be tight, because if it does tick up there and hit it, then we got a reversal. It's probably going to go higher. So I want to get out of the way, at least part way. I'm actually going to move this one down here a little closer too. Slide it down. And now as this thing falls, we'll just watch it and continue to move the stop down. In fact, I'd leave that one stop there, because if we did close back above here, we'd have a bullish engulfing pattern then, right? So somebody, you got to look out and go, okay, if this happens, what does it tell me? If this happens, what does it tell me? If this happens, what does it tell me? Planning out different things. Breaks through 166.15, could run down another $4. Yeah, that's what we're looking for, right? Clear all my drawings. There we go. Okay, want that. So we're going to, you know what? I'm going to change this and see if we can make this not exactly what I wanted, but that's okay. We'll use that one. Actually, let me see if I can put it down here. Oh, that's a daily. You know what? We're just going to unhook this and hook this one. I think that'll be easier. Go to a 5-minute chart. Okay, there's Apple. Okay, let's look at the other ones. So I'm pulling these all from here. This is my list of, so these are my swing trade candidates for the week. I usually go through on a Thursday or early Friday morning and look for patterns. This week it narrowed it, well, out of the 277 that were on the list, I knocked it down to about 60 something and then knocked it down to 24. So, and then I take this list and import it into my toss, which is over here, which is right here, this list right here. So that's what I'm pulling from, is this is my swing watch. But the beauty is that, and especially when we have a big market, a moving market like we do right now. Let's see, and there we go with Apple. Let me make that bigger. There we go. She's out of the way enough now. Now what do we have going? We have a little hammer pattern going on right now. I'm just going to make that big while we do this. If you have any questions, fire them off. Yeah, it's reversing big time right now. Trying to get that. Oh, those are too close together. Where's the number at? If I can, there we go. Sometimes you just gotta, I'm gonna move that to 39. Sometimes I go over, if they get too tight, can't move them like that. You can just go over and manually punch the numbers in. 38, I don't know where that's at. Oh, so I take a three penny hit if that one hits. So I'm gonna make that a little bit tighter in case this thing keeps running here. And then just let it go and see what happens. If it stops it out, then we'll see what the other one does. If it stops the other half out, we'll lose, I don't know, 50 or 100 bucks probably. Not bad for 500 shares, right? Yeah, we'll see. It's close, but all right, let's jump over. Let's go see if there's anything else. We'll let that one play. If it turns over and tanks, great. If not, oh well. So ABBV now on the bottom window, basically I'm going to start looking for some kind of patterns. And this is essentially when it comes to trade, I'm looking for something. Do we see anything here that's taking place in the right side? Nothing there. Boeing. We're going to have a lot of similar patterns to like Apple has, right? Where you're going to have it dropping and then it's hitting lows. In fact, we have, I like the looks of this actually. And we've got trading plan stuff on there because this is very, very similar, right? And it looks like we have some potential down to about 164. That's about 2 points. So I'm going to see if we can. Yeah, we're going to put it right there at 166. Put the target right there at those highs. So this is, again, just looking for support and resistance. It's a 5-minute chart, but it's the same process, the same everything. If we were looking at a daily chart, I'm going to put the stop right there, just above that last candle The target will make it 164.09. Now we need our calculator. What's going on here? Oh, there it is. I don't know how that came up. This is where I get because it's moving, right? Intraday, sometimes trading like this, it's like, I'm not really freaking out, but it's like, I don't want to miss it. What's that other number at? We're going to move them. Copy it. I guess I'm here already. Might as well make it the right color. There's the stop. The target is 164.09. 65.69. Okay. We're still good. 65.69. Make that green. Now we have a plan, but we're getting close to it too. Let's open this puppy up. Oh, what happened here? I don't know why. This is where it's set up very differently on here, but that's okay. We can still make it work. 65.69. How many do we want to do? 1,000 shares? Let's just do 5. We need 500 on Apple. We'll do 500 at 165.69. So we're going to sell it short, sell 500 Boeing at a stop 165.69 to open. Notice I'm using a stop to open. This is if you're day trading, then that's essentially what, if you're trading stock, I guess, not necessarily day trading, but if you're trading stock, that's what you can do. That's basically a way of triggering, right? Instead of you put a buy to open above the market, right? Well, you can sell stop below the market. You put a sell stop in. Then when it hits the stop, it sells it short. Same thing, right? Yeah, it's like futures, exactly. So we'll see if that hits. Let's make this, shrink this back down. We'll just leave that alone, let it play out. I'm actually going to see what Apple looks like. You know what? I'm going to move this down even further, actually, and make it even tighter, because if it rallies up, I'm going to put it at basically the top quarter of that candle. Because once again, if it rallies from here, we've already got a hammer type of pattern here, even though the body's a little big, but that's still a pretty bullish candle right there. We've dropped off a little bit, so I'm protecting the profits even more now. I'm going to move this stop down, make it even tighter, especially this one on the 300 shares. I'm going to drop this one down just a little bit to the top of that candle. And all we're doing is, if this thing continues to fall, we're just banking more and more profit and protecting more and more of that profit. So we just drop it down, and we're making the decisions on what the price chart is telling us. Because this, the very last candle, not the one that's happening now, but it has some bullishness to it for sure, because we dipped down and then the bulls came back and rallied it back up. Once again, whether that's if it's a daily candle, I would do the same thing. I'd put a stop just above it and then let it do its thing. And right now, I mean, it's dropping back off, which is a good thing to see. In fact, I'm going to pull that down even more now that it's dropping even more. I'm going to go to about the half point of that candle. Because again, if it turns from here and starts to rally again, then we have a tweezer bottom. I mean, we're essentially hitting the lows of that candle. So now we've got a tweezer bottom taking place. So if it rallies from here, I want out, or at least a part of it. And in other words, I'm trailing some of it really tight, trying to maximize the profits, but leaving a little bit there with a looser stop, so that if it wiggles me out on part of it, then I'm still in it, right? Give enough room to wiggle without giving up too much profit, right? Yeah, most likely. It's always hard to give a definitive answer. Will asked, would it be easy doing the same amount of shares on a real account or on options? Yeah, most likely. So, and again, it just depends. On a move like this, I might do bigger because things are even better. When it's a really good picture, in other words, I gauge how many I do, how many shares I do, or how many contracts I do is based on what the chart looks like. I don't have a static, 100 shares of one contract, 10 contracts, 20 contracts. I base it all purely off of what does the move look like. Here we have a big, solid downward move, big bearish move. The whole market is pretty ugly today well, if you're a bull, it's ugly. If you're a bear, it's beautiful, right? Which I'm pretty much a bear right now. I have been for well over a year. I'm going to move this down just a tad bit more. And in fact, I'm going to slide that one down even some too, put it right above that candle. I'm pretty certain that we're below, where's that price at? 136.34. Yeah. So both of those stops are now, our entry point was 166.36. Both of these stops are below that level, which means Apple trades enough liquidity, it's not going to gap through it. In other words, I'm in a profitable position on this trade no matter what right now. So I don't care what this thing does anymore. Even if I lost 50 or 100 bucks, I mean, 10 minutes ago, I was fine with it. Losing 50 or 100 bucks, if you're taking 500 shares, that's virtually not, it's basically a break even. I mean, if you look at the numbers of this thing, you're looking at what, 80, well, what's half of 166? 83. Yeah, you'd have 83,000 bucks on the line. Actually, half that because of margin. And if you got pattern day trader rule, it's a quarter of that. But you're still looking at, even with pattern day trader rule, you're still looking at 25, 30 grand on the line that you have, I mean, on hold. So, yeah, that's a good question. Is would you do the same thing? And it varies. It's all over the map, especially with me, because I don't, like I said, I don't keep it static. If it's a really solid pattern, I'll load up on something. I just added, I've got, well, Boeing, that's one reason I'm familiar with it, is that I added, I have some puts on this already that I was down a little bit, a couple $100 on. And this morning when it started to roll back over, right in here, actually, right when it started to tick back up, I threw an order to add to it. If it was a little bit above the market, I was looking for it to do a roll reversal here. And this is the beauty of charting. Again, the stuff that I do is super simple. In fact, a lot of people like to criticize it. It's too simple. It's got to be more complicated than that. No, it doesn't. Are you familiar with roll reversal? Does everybody here know what roll reversal is? Where old support becomes new resistance? What just happened right here, right? You got Powell spoke, boom, it tanked, it rallied back up, it came back and broke right through it right there. Grab my pen again. Right? So we've got a support level here. It broke it right here. Pretty solid with solid volume. And then it rallied back up, and where did it go to? Right to that level, and it rolled over. So when I saw it break this level, I was like, you know what? And it's up a little bit. And I was like, you know what? This is probably a good time to add to it because it looks like things are going to be bearish for a bit. I've been loading up for the last week or two on some puts and waiting for a day like today to add to it. And so this was the opportunity. And this is where, again, not only basics, but learning to use intraday charts to fine tune things was I was already thinking if Boeing rolls over today, if it continued to rally, it would have stopped me out. So like, okay, if it rolls back over, I'm underwater a couple $100, $300. And I have an opportunity here, if it does drop off, to add to the position at a lower price than I got it originally. So I get more leverage out of it, especially if it tanks like I think it's going to. So it breaks there. And then as it started to tick up is when I put an order slightly above the market. I think it was 10 or 15 cents above the market. And it came up and somewhere right in here, it triggered it. So I'm adding puts right in here, expecting that this is going to be the new resistance. And just like you see on a daily chart, this is a 5-minute chart, but the exact same concept plays out all the time on intraday charts, just the same as it does on daily charts. I mean, you kind of see the same thing here with Apple, right? We've got kind of a support here. I mean, it's built a little base right in here. It broke it there and then came back and tapped it and then rolled over. That's not as pretty as Boeing is, but the concept is still the same, right? So that's the beauty of it. That's one reason I get a little bit giddy about charting sometimes. And when you see stuff play out like this and just go perfectly the way you would expect it to, and we're still sitting here waiting. There's no trigger on that, on the Boeing order. Move that a little bit smaller, but Apple, I'm going to make that big. Oh, we got to go look at the Qs, huh? Actually, you know what? I'm going to slide this down even more. I want to make that super tight on that one. And then I'm going to move this one to about the halfway point, slightly above the halfway point of that candle. So now I'm doing basically just moving the stops down and down and down as this thing, if it keeps falling. We got a big volume spike there. You can see on this last candle, which is, it's hard to tell what it means at this point. But if it bounces from here and it takes off to the upside, then most likely that was somebody adding 2 positions or maybe covering shorts too. And that's what's hard. You never know, right? There's no way to pull that data and figure out what they're doing. But we're just going to let it go. And if it stops us out, great. If not, no big deal. Exactly, Will. I just noticed your comment there. Yeah, good move, scale in more, weak move, scale in less. And it's one of those things, and there was some guy on Facebook posted something like, what do I do with this? Because I put my stops too tight and I get stopped out, and I do how do I handle this? And then if I get out too early and it keeps going, I'm like, scale. If it's running, just take part of it out. Take a third of your position out, or whatever, whatever works. If it's running really heavy, maybe only take 20% out. If it's only running, if it's getting kind of weak, if it's not a really strong move, maybe take half out. If it's somewhere in between, maybe take a third out. And then as it runs, you take another third. And then if it keeps going, then you keep making money. Right? And or you can just like we're doing on Apple. Usually when I do day trades, it's like this. I'll move them down and ratchet them down as we go. There's sometimes where I'll just pull it, say, I'm just going to take this out. I'm kind of tempted to on Apple right now. It's like, maybe just take out 100 shares, 200 shares right here, kind of trying to catch the bottom. If it does bounce from here, then I've maximized profit. If it keeps going, I've still got some there. Let's see if we can find anything else. Bank of America, no real pattern there. BMY, there's a pattern. That's a sideways pattern, which we don't want. We do want it once it breaks out of that pattern, but at this moment, we don't want it. There is Citigroup. Ooh, Datadog. Oh, Apple just triggered part of it. Have you heard that? Want to do a trailing stop on Apple? It's essentially what we're doing. Just doing it manually. You could. I've done that before. I had one day I had to leave and I forgot that I had to leave. I had to go to a meeting. It was like, and I put on a day trade. I think it was 600 shares or something like that. And I'm like, oh man, I got to go. That's right. What am I going to do? So I put a trailing stop on it, but nobody said you have to put a trailing stop on the whole thing, right? At least at one spot. I put 3 different trailing stops, 200 shares each. And one was like 10 or 20 cents. And the other one was a little bit more. And the other one was a little bit more, right? So same concept. You can do actual hard trailing stops. And it's the same concept of what we've been doing over the last 20, 25 minutes. Instead of, manually moving it down like I've been doing, the system will do it for you. But that way, right, because you put a tight stop on part of it so that if it backs up a little bit, then you're maximizing your profit on a piece of it, but then you're still leaving it open to give it, hopefully it turns and goes the direction you want it to even faster, right? So Datadog, let's look at this for a possible bullish move. It's definitely bouncing a little bit and it's been beat up enough where, and again, I'm just looking at, so here's the previous high, which was the low. There's another beautiful example of roll reversal, right? We've got this little support level. It broke it, comes back, taps it, and rolls over from there. So that will be the next target for the upside move if we have one here. Oh, man, where do you put the stop? It should realistically be below that low, but that's quite a ways down. I'm going to make it a little bit tighter. And if it gets hit, then it gets hit. Make this bigger. And I would suggest if you are day trading like I'm doing here, you want to have these things set up, preferably in advance. I mean, obviously I'm doing it on the fly here, which isn't bad. But if you can see something ahead of time, and one thing I've learned is to be patient, which is hard, especially when things are moving quick, right? 108.15. So there's the entry point. Good thing we didn't just hit it, huh? I didn't see how much, what's our risk reward on that? This is the nice thing is you can see, okay, so I got $1.29 of potential profit, 43 cents of reward. So now you can say, okay, how much do I want to risk? Depending on, how much capital you have to work with. Well, you got $107 stock, you're looking at making $1.29 if it runs up and hits the target. If it doesn't, you're going to lose 43 cents. Well, if you're comfortable with losing $430, you could do 1,000 shares. If you're not comfortable losing 430, then how much? If you're comfortable with 43, you could do 100 shares. Right. And this is based on day trading. But the beauty is everything we're talking about here, the concepts would apply. If you just made this a daily chart, it'd be the same thing. So it'd be an exact same concept. No different. The analysis would be the same. You got roll reversal, drop off, potential entry point. I'm just going to keep doing this Actually, you know what? I like this even more. I don't even know how much buying power this practice account has. Let's try to do 1,000, see if it works. Because I like the looks of this. The one thing I like about it is, number one, we sold off pretty heavy, right? We built this nice little base. Volume gets lighter and lighter. People trying to figure out where we're going from here. Now we just got on this last candle, we got a pretty solid pop of volume, which tells me that, okay, the bulls are kind of excited about this, or there's a lot of people covering the shorts. But that can be an indication of a little momentum to come. So we're going to see if this thing, again, I don't even know how much buying power this particular practice account has. But you know what I'm going to do? I'm going to be a little bit cray here. You know what? I'm going to pull that down some too, because it's getting close to hitting. I don't want to leave too much of that out. So move that down and try to maximize our profits if it pops. And here's the beauty is you could always get back in, right? If this thing pops and stops me out, that's going to be, what's it at? It'd be 140, 150 bucks profit. And then the beauty is we have this old resistance of 166.37. I could put a trading plan on here, but if it rolls back over, then I would look at getting back in because we've got that old support, which should act as new resistance. So, but what is that number at? 107.93. I'm going to do this. This is one thing I love to do. And you can do this trading. I'm going to put it at 108.02. So buy 500 to open of 108.02. Again, this is a paper trade. Just, oh, Karen, hang on just a second. I saw your quick. So I'm going to put 2 orders in 108.15. And I love to scale them like this. This is, and if you haven't ever experienced it, do it on this. Get on a paper trade account and do it like this on an intraday basis. If you want to get really good at charting, do what we're doing here. It's part of the reason I wanted to do this today. Because if you want to get good at analyzing charts and recognizing the moves and seeing how things move, do it on an intraday basis like this, live and in person, and where you have to make decisions. And granted, it's paper money, but still, you start to get a feel for how stocks move and you see it. It's a 5-minute basis. Then all you have to do is convert it and go, okay, I do this on a daily basis. It's the same concept. It's a great way if you can trade on an intraday basis, do it on paper, and you start to understand the mechanics of it a lot faster. And if you really want to learn, if you've set aside, a play money account, there's Apple just got stopped. If you have some real money and you want to learn, and if you've set aside like what do I call it? Learning budget, if you will. In other words, let's say you have 10 grand to start with. You say, I'm going to take $1,000 and I'm going to day trade with it, which actually you'd have to have over 25 grand to hit the pattern day trader rule if you're going to day trade, unless you do 3 in a 5-day period, right? If you have a cash account. Excuse me. But okay, let's say you got 30 grand. Well, if you set aside $3,000, say, okay, I'm going to learn with this. Go day trade. Say, this is my maximum loss. I'm going to learn. Go day trade with it. Because it will, especially when you want to learn the emotional side of trading, it's a faster way to learn. Just don't lose the 3,000 really fast. Do it slowly. But it's a great way to be able to understand it, right? Yeah. Karen, good question. I'm glad you asked. She says, do I play the breakouts or do I wait for the retest of the breakout area and then a continuation of the breakout direction? Yes. Depends. I know I sound like a lawyer, even though I'm not a lawyer. Most of the time, I play breakouts for the most part. Occasionally, I will play off a support or resistance level. And that's where I know some people get all weird because they're like, well, what do you mean you're aggressive, but you're conservative? Because for some reason, I've been saying that a lot lately too. I trade very aggressively, or I enter at aggressive places to enter, but I do it conservatively. In other words, instead of going in 10 contracts, I might go in with 2 or 3 or 1 even. And kind of going back to Will's question is like, how much do you do? Do you always do the same? No, I vary it based on what the chart tells me. So my trades are rarely anywhere close to the same size. I don't do all 5 or all 10 or all 20 contracts. It's sometimes 1 or 2, sometimes it's 10 or 20. It just depends on the stock. It depends on the chart. It depends on there's all the variables included, right? So typically, and like Apple's a good example where it was breaking out to the downside. Well, I got in on the breakout. And realistically, probably could have added right here a little bit to it. But sometimes I'll do that. Sometimes I'll get in at the breakout and I'll take just a small amount. Kind of like, I mean, I guess D-Dog is a good example since we're looking at it. Because if this thing breaks up, because we got a nice little base built, right? If it breaks to the upside and takes off, then I want to be there and catch, hopefully, this move, right? There is the potential that it runs all the way up here too. But I want to play this breakout, but I want to do it. And if you do it at the aggressive place, then obviously that maximizes your profit potential, right? But if you get the whole thing in at the aggressive place, then you obviously put more risk. So I put in half at, where'd it go? Whoops. If it'll split out, there we go. So I basically said, okay, if it breaks above this level, I want to get in. I'm going to put a little bit in at 108.02. So I'm putting half a position in there. And then at the actual entry point that I have targeted, that I have played out here of 108.15, I'll put the whole thing in. I'll add the other half. And sometimes I'll do this in 2 or 3 chunks. And that way, if it breaks out, and I've had this happen where I put like 200 shares, really, really aggressive. It could even go like 200 right here and then 200 here. And I've had get hit at a really aggressive entry point on 200 shares when the intent was to go a full 1,000. I have 200, 200, 300, 300 in different spots, and it runs up and hits one of them and then turns over and drops and then hits the stop. Well, on 200 shares, I mean, if this thing hits, 108.02, that's 30 cents of risk instead of, what was the overall risk on it again? 43 cents. So in other words, if I was doing the full 1,000 shares at 108.15, as my plan shows, I'd have $430 at risk. By doing it this way at 108.02, that's 13 cents on 500 shares. What's that? 60 or $80. So I've only got what, 350 or so at risk, somewhere around there. So I've reduced my risk by scaling in like this, by getting in at an aggressive place, but I've also increased my profit potential by that much as well. Right? Because if it does take off and run and hit this one and then it continues, then I've made that much more per contract or per share. Does that make sense? Answer your question? Good. Okay. Quite welcome. But generically speaking, yeah, I basically, I'm looking for breakouts. I'm looking for a pattern. I'm looking for a pattern that I'm waiting for a breakout is probably the right way to say it. So let's see what's Apple. Oh yeah, it's D-Dog. Let's see what's Apple's. Where's Boeing? Did Boeing hit or not? I don't think I didn't hear it go off. I didn't see anything happen. So interesting. We got a short potential on Boeing is what we're still watching. And then D-Dog, Apple's rolling back over. And this is where if this thing goes down to like 164, then you get cranky on Apple, right? Because like, I should have stayed in. Yeah, woulda, shoulda, coulda. But 141 bucks. If we're pushing the button a few times and moving things around and just watching it, and how long is it? We got in right there, 9:15. We just stopped out there. So in 25, 30 minutes. I mean, you're not getting rich doing it, but well, actually you would. If you did that 4 times a day, I mean, it depends on your definition of rich, but you do that 3 or 4 times a day. Of course, some you're going to get stopped out on. So if you do 4 different trades, let's say you get stopped out on 2 of them at $50 a piece, it's 100. You do these 280. So what's that? $180 for the day. That's 50 grand a year. But that was only 500 shares. So you just scale it up. If you can make 50 grand a year, that only took, well, if you did it off of this, that only took what, $30,000 to do it. That's all that was at risk. So, if you got $100,000, $200,000, $300,000 you're working with, and you can put these kinds of trades on all the time, or if you just make it 1,000, then you double the numbers, right? If you make it 1,500, you triple the numbers. Usually the number, you know how to figure the numbers out. It's just it can get wild and crazy actually. And that's the key though, is doing it consistently. That's the key, and it's also the hard part, right? As some of you know, trading is not exactly the easiest thing in the world to master. So. Good point. You know what? Let's bring that up. I'm going to bring that up on a daily chart. Thank you for reminding me. I almost forgot. I didn't forget about you, but I forgot about the cues. So this is, and let me do it real quick. I know we only have a few minutes left. We'll do a quick intraday. Where's it at? It's down 7. This case. I'm in a weird spot because I want the market to bounce a little bit today. I want to keep tanking, but at the same time, I want it to bounce. I know, doesn't it? A couple classes ago, said to start the we said if it drops below 319, target of 301. Yeah, there's a trading plan. You kept good records. That's impressive. I'm not that good, actually. That's why I put them on here, like I do, because I don't know how you kept those records or if you drew them like this, but I do it on here so I can see them. Yeah, that was, I mean, looking at the Qs, which is the NASDAQ, right? We actually have basically a head and shoulders taking place right now. Oh, there, it's updating. That's why. Oh, it's down even more. Oh, I'm hitting the wrong button. I'm going off. So we have the downtrend line, which we attacked and we tried to get, but we're dropping below that right now, which I think we're on another, it looks like the chart right now is saying that we're on another leg to the downside. How far it goes is hard to say. But yeah, 301 at this point is the target. Oh, something just hit. Because we've got some pretty decent, yeah, it's a weekly. So we've got some old support, old resistance right there about 301. If it cracks that, it's most likely coming back down here to this 268, 275 area. But you can see, if you're familiar with patterns, you can see there's a little head and shoulders going on right there. And the neckline is sloping down. It's a little steeper than I like. And in this case, I wouldn't use the neckline. I would use this point right here, which we're breaking through today. So yeah, I would not be surprised to see it come down. There's a little bit of support there. That's pretty minor at 307. Come on. So this is where I would, if you were in a bearish trade on this, if it gets to 307 and stalls out, I'd be tightening my stops up pretty solid. If not, if it just blasts right through it, I'd scale out a part of my position at 301. Yeah, we're looking really similar to this back here type of situation. Kind of, actually, maybe not quite as good as that, but hard to say. What just happened? We're gonna get these here. I think D-Dog just hit. Yep, it did. So I'm going to cancel that Boeing one because it's popping a little bit. And let's just make this full size. And we're going to spend the next 2 or 3 minutes just watching this puppy. Or should we just close it out? We're up $80. Which, notice now my cost basis is 108.09, which is better than 108.15, which I was originally looking for. So I basically cut my cost basis on the entire position by about 6 cents. Which doesn't seem like much, but actually that's $60, which accounts for 3/4 of our profitability. And this is where I'm going to put a stop. I'm going to do it in 107.72. I'm going to put one at the original spot. I'll put one just below that, 107.89. If I want to, ooh, now with that, we'll make it pretty tight on that. I'm going to put it 108.02. So we close. So now we've got, so we broke to the upside is exactly what you want to see, right? And this volume spike was kind of what clued it in. We got a nice little bit base building, right? This is where V-bottoms don't happen. This is about as textbook as it gets. Big drop, lots of volume, and then it spends however many candles, but there's about 20 or 30 candles here, which on a daily chart would be 20 or 30 days. This is where it pays to be patient. And it's hard, especially for me. I'm not very patient. I don't like to wait 20 or 30 days. It's like, I got to wait a month. But when you do, and you get a day like this that pops and you get big volume, it says, okay, we might have another move to the upside. It looks like we will. Then you can prepare, have your plan, and put your hooks up there. And if it hits like it did here, again, if this were a daily chart, then you'd be in decent shape. We'll see what happens here. But, and then essentially I'm just putting a stop. I mean, we've got 1,000 shares. If it was 10 contracts, I'd put a stop on 4 contracts fairly tight, 3 of them back here and the other 3 back here. Excuse me. Whew. But we do have, over these last little 20 minutes, we have a decent little increase in volume, which seems to indicate some buying potential in here. And here's the other beauty. This is one thing I love about these types of things is when you get a big drop like this, any day traders that are short in stock that got short somewhere up in here or even in here, when it starts to pop like this, they're going to be like, ooh, I got to cover my shorts. And so when they start to come in and cover, that's what causes a lot of big pops to the upside. And those can be really fun. About probably 3 or 4 months ago, I caught one on Apple. It was similar to this. It sold off in the first like half hour of the market, started to build a little base, and it was very, very similar pattern. And I remember I did the same thing. I put an order of like 2 or 3 things to trigger on the way up. And in like 2 minutes, I was looking at a 1 minute chart. In 2 minutes, it just ding, ding, ding. And then it just ran. It was a bunch of short covering. And it was, I'm trying to remember, but it was like 7 or 8 minutes. And I ended up with, I think 800 or 1,000 or 1,200 shares. I don't remember exactly what it was, but it turned out to be $1,500 in like 8 or 9 minutes, which is rare. It doesn't happen very often when you get something like that. I moved that quick. It was $2, $2.50 in a matter of 7 minutes or something like that. And it was just crazy. And so, yeah, I was pretty stoked. That made for I was done for the day pretty much. I dinked around a little bit, but I'm like, you know what? $1,500 in 7 minutes is not too shabby. Plus, I knew that you have something like that happen, you get a little bit cocky. Anybody ever done that? You get a little cocky, like, oh, I got this. And then you keep trading, and then you overtrade because you think you're going to do it again and duplicate it again. And then you give back all your profits. Am I the only guilty one here? Yeah, haven't we all? Every trader I know has done it, and I've done it more than once. So anytime I have, and this is the thing, you've all heard people say, if you have several losers in a row, go back to paper. If you have a bunch of winners or a big winner like that, go back to paper. Not necessarily go back to paper, but rein yourself in, because you will start to think that you got it figured out. I can't tell you the number of times I've done that. I'm like, I got this all figured out. I know how to do it now. And then you get sloppy and lazy, and you don't stay disciplined, and you don't stay vigilant, and you don't realize that the market can really chop your head off really quickly, financially speaking, of course. So you definitely got to be cautious. So yes, it does, Andreas. It absolutely kills the day. And that's why I've learned, because I did do some more trades, but I went down to like 200 or 300 shares is all. Just because I just like, you know what? I'm happy with, $500 to $1,000. If I can average $500 to $1,000 a day, I'm good. I'm happy with that. I mean, that's a comfortable living, right? I'm always shooting for more than that, but and usually it takes the whole day. If I'm day trading, it takes the whole day. It usually takes multiple trades to get to that point. But to do it in 7 minutes it's just like, it's unusual. So it happens sometimes, but it's pretty rare. So yeah, but we're out. Any other real quick questions? I'm going to watch this. I mean, if you paper traded this with me, then I'm just going to keep moving this stop up since we've got to go. But if you want to keep track of this and see what happens with it, but you can see where things are at. If it runs up to 109.44, how much did we have again? $1.29. So, I mean, if we had a quick short cover rally, it's been more than 7 minutes, I think. But actually, I guess it hasn't. If this thing blasted like 110, it'd duplicate that. But a rye. All right, we'll look at that really quick. You guys always suck me in at the end. The pattern of the week from last week. Yeah. Yeah, this is a tricky one. It hasn't triggered the entry yet. So for those of you that don't have patterns in Flash, once a week I do a pattern of the week, and usually a couple, because I try to find one bullish, one bearish. It originally started as one, like I'm going to give my favorite pattern that I find in the week and give it out. Thanks, Miguel. He put the links there again for the trial. So every single week. So if you go to the trial now, you'll get 2 patterns of the week, and you'll also have the week after next, be able to come and spend an hour with me. We do charting and whatever I want. It's my class, so I do what I want. But basically, this is kind of the opposite of what we saw in Apple this morning, right? We got a flag pattern, big flag pattern, pennant, and then it broke down a little bit. So it's still kind of in play. I guess it's probably more of a flag now. I would do this, change these and modify them a little bit. But if it was to break to the upside and keep going, then I'd be interested in it. I mean, obviously the market is dragging it down, it looks like, because the market's gotten bearish, which you have to take into account. Because if the overall market drags stuff down, if this thing drops back down. And this is another reason, though, that it's important most of the time to wait for it to break. And that kind of goes back to your question, Karen, is if the breakout is suspicious, if it does it with light volume or something like that, then I would wait for a pullback. Don't necessarily get in, even with a small position. There's so many variables, but when you look at it, you go, okay, it's breaking out, but it's not doing it with a lot of momentum, a lot of volume, a lot of emphasis. The bulls aren't really that excited. Then I would wait for it to pull back. And if I miss it, I miss it. A lot of times I get in with 1 or 2 contracts or a small position, because that way, if it takes off without me, it's not without me. I'm there. I might not make as much, but at least I'm making something, right? There's that fear thing you have on both sides of your brain. Like, I don't want to miss it, but I don't want to lose a lot. That's one reason I pick up small positions at aggressive places, because then if it does take off, I'm still there and I'm making something. But if it does back up against me, then I don't get hit that hard. Like this. I mean, you could have realistically, well, it didn't even hit the entry point after I highlighted it, after we talked about it last week. So we'll see. Again, it's something that's on the radar. If it busts back up here above that 23 level, then I'd have an eye on it. So that good, Will? Let's go see what D-Dog's doing really fast. I got to call it a day. Hey, it's up even more, up 220. See, this is 2 trades just waiting for patterns. This is one reason I do patterns. I mean, Apple had a good pattern. We ended up banking $140. I'm actually going to move this 300-point stop just below that lower stop. I'm going to move to just below that last candle. And a lot of times that's what I'll do, because now we're getting a inverted hammer, shooting star, whatever you want to call it. So if this closes right here, which we're a couple of minutes away, and it rolls over, then it might come back down here. So now I've basically protected some of the profits. I moved the original stop from 107 up to here. So now we're going to take probably a $200, $250 hit if it tanks from here. So, or I could just cash out. Should I just cash it out just for the class and say, look, we made $200? No way. Why leave money on the table? Why cash it out? Just so I can say we were profitable? I'm not going to. That brings up a good point, actually. Some people do that. And that kind of went to the guy's post this morning. It was like, people will say, well, a profit's a profit. Kind of. But if I closed it right now, banked 190, and an hour from now, it would have been $1,000 or $1,200. Yeah, profit's a profit. But if you make a whole bunch of $190 trades and then you have a $500 loser, you're upside down. So the goal in trading should be to maximize profits, to absolutely squeeze every single nickel you possibly can out of it. You got to have those big giant profits to make up for the little losers you have, right? Stick to the plan. Exactly. That's why we're going to leave it. If you want to track it and follow it while we're gone, since now we're 10 minutes late, there. See, it went down. It's all right. You should sign off before it goes red. I don't care. It is what it is. Trade's a trade. It's going to happen. Whatever happens is going to happen. I'm just going to let it be. And then, it is what it is. So yeah, the beauty of, if you day trade, the beauty of that is that there is no commission. On the stock trades, there's like little fees that are pennies. So day trading with toss, most of them have gone to zero. It just stopped out part of it. So, all righty. Sorry for going a little bit long, Miguel, but appreciate y'all coming and hanging out and having some fun. And yeah. So it has been fun. I always love doing these, especially the intraday trading ones. It's good. It's fun to watch things play out. So yes, if you're day trading options, there are commissions on options. They are relatively cheap though. For some reason, I've been thinking about that lately. When I started, the cheapest commission I could find was $75 per trade, for a trade. $75, not cents, $75. It's a whole different ballgame 20 years ago. Today, you can trade relatively inexpensively. It was a lot, very expensive. Trading commissions were huge back then. Now they're minimal. They're almost nothing. They're virtually nothing compared to what I started with. So, all right, y'all have a wonderful day. Have a great weekend. God bless. Bye-bye.